We're talking interest rates, we're talking debt ceiling, we are talking about the 72-win 1996 Chicago Bulls and why the housing market is just as good as them. So thanks for joining me on Midweek Mortgage Talk. Let's kind of dip into interest rates and what's going on in our interest rate environment. So on May 10th, we saw that 10-year Treasury, which correlates with mortgage rates. The lower the 10-year Treasury, the lower the interest rates are. That Treasury, the 10-year Treasury hit 3.39 on May 10th. From there, due to some uncertainty due to the debt ceiling and with banks selling bonds to create liquidity, we saw day after day increase. That 10-year Treasury got all the way up to 3.86 last week. Interest rates went over 7% for the first time since earlier on or at the end of last year. So interest rates went over 7%. Now, over the weekend, they came to an agreement. The Senate passed the debt ceiling, and we saw some pricing improvement here. So that 10-year Treasury is now 3.65. Interest rates dropped a little bit, but there is definitely some more room for improvement. Now, it looks like that the debt ceiling will get accomplished, passing in the Senate already, needing the House vote today. The bond market should now follow fundamentals, which is inflation. When inflation goes down, so do mortgage rates. So we will see some improvement, and we have some good signs ahead. So looking forward to the demand for mortgages get to be a lot more because those interest rates dropping. So let's talk about the 72-win Chicago Bulls. Growing up as a Michael Jordan fan and a fan here in the Chicago area, loving those Bulls. 72-10. Well, who is just as good as that? Well, that's the housing market. So yes, this debt ceiling crisis would have created some issues in the near future if it didn't come to an agreement. But over time, since 1942, the housing market has gone up 73 out of 81 years. It went 73, 7, and 1 that the housing market increased. So yes, if the debt ceiling deal didn't get done, we would have still seen probably an improvement on housing prices. That debt ceiling would have come to an agreement at some point. So that housing market, 73, 7, and 1, just as good as our 72-10 Chicago Bulls. So it makes sense. Get in the market. You can't time this thing out. As you can see, since 1942, we've been going up year over year with only 7 losses, 7 years into the negative. And June 14th and 15th, the Fed's going to meet. They're going to be talking about raising rates. The Fed looks at old data. The inflation indicators show that the numbers are going down. So we're hoping that they realize this. And obviously, they're raising the Fed funds rate, which sometimes doesn't correlate with mortgage rates itself. Let me know if I can help you out. Obviously, want to get educated throughout this process. Yes, rates are higher right now. You will have the opportunity to end up refinancing. You want to get into the market, though. Thanks again for joining me in Midweek Mortgage Talk, and I will see you next week.